And this is the discussion that we've had with a number of other houses. David Bloom from HSBC said no matter how many times you see these cuts come through from the Fed, and if there's 3 more to come, as ABN said, it's still Hotel California. You just can't check out of the dollar because of yield.
Yeah, I mean, like if the Fed eases and we do not see a significant impact on the US dollar, the political pressure on the Fed to do more will of course remain. So it's very difficult for them in this situation to do sufficient to appease the president on the one side, but also to stick to their official target and to show that they are not actually building to political pressure. So they are really between a rock and a hard place right now.
Esther, one of your key calls is that you see potential upside to euro-dollar towards the end of the year and also next year. Can you walk us through your thinking, given that we have just discussed that the downside impact on the dollar from Fed rate cuts might not be that great?
Well, in euro-dollar, it will of course depend also on what the ECB is doing, and we fear that there is not that much they could actually do. And with, like 3 or 4 further Fed rate cuts expected already for this year or beginning of next year, like this is 75, 100 basis points. The market is expecting 40 right now, around 40 basis points cuts by the ECB right now, maybe further quantitative easing. But like looking at the 10-year yield levels, there is not that much expected they can do to lower yields in Europe. So the downside potential on yields and also on the US dollar just look more, or on the US yields and the US dollar just look more attractive for if you look at what both central banks still can do to ease monetary policy conditions.
Esther, where does gold or harder backed assets come into the protection play? There's a lot of notes out this morning, a lot of people upping their view in terms of gold as a haven. As you look at yen, as you look at gold, are you guys talking about it as an alternative hedge in this market, or how's it playing into the conversation?
Well, we are, as FX analysts, of course, particularly looking on the Japanese yen, which is just simply an attractive safe haven because the Bank of Japan, or at least we believe that the Bank of Japan also can't do that much to ease monetary policy further and therefore do something against Japanese yen appreciation. However, gold, of course, is a traditional safe haven, and in particular in these uncertain times, I think it will definitely remain in big demand.